/WBD.
Should we get into the macro risks?
Yeah.
Because macro is interesting at the moment.
Macro is very interesting.
The one that's crazy to me, I think people, when you talk about bonds, think it's boring, but it seems to be like, it's the signal for everything.
It's
right?
the bedrock.
And 30-year yields in the US, the UK, Australia, I'm sure other places, are now above 5%.
The trend of yields is higher, and why that matters is yields are inversely related to price. So if the price, or literally the value of the collateral that backs the whole system goes down in price, higher in yields, it's the market saying that something's wrong with the bedrock.
And so I think the UK is actually pushing 6%. It's like, is that the market saying, well, we saw inflation come back in the US. Is it the market saying they're scared about inflation? Is it them saying, we think the debt is out of control, deficit spending is out of control? Is it all of these things? Like what?
It's all of the above, yeah.
It's basically the market saying we don't trust you anymore.
Pretty much. I mean, if you think about it, like at the highest level, there's obviously nuances, especially when you talk about the global reserve currency versus Japan. There's going to be certain nuances here, but higher yield means they can't attract enough buyers at that price. So the price must go down to find buyers, which means yield must go up. If you can't get financing at 5%, someone might lend to you because you're riskier at 6%. And if you can't get financing at 6%, you might have to go to 7%, and that lifts. This is the thing. If the sovereign, the Aussie government needs to borrow at 5.5% for a 30-year, who's more likely to pay back the Australian dollars? The government with a printer, or you, mister, with a job and a 30-year mortgage?
Yeah.
You know what I mean? Like, it's...
But